Thanks. It's great to be here. Isn't it fun to be in Wichita when the Shockers are undefeated? God, I mean, it's just fun. It's kind of hard to hear about the Shockers outside of Sedgwick County. I'm sure ESPN obviously has some kind of bias against Wichita, Kansas. It's just as loud and clear as the New York Times bias against common sense and government. But with that said, no, don't clap. I'm not running for office. I pay my income taxes, as you all know. But thank you. It's fun to be here. I'm still bullish. I turned bullish in the third quarter of 2011 after 4 or 5 years of feeling like I was the guy in the mask of the Red Death that showed up at the ball inside the castle and had the plague. And so after 4 or 5 years of that, it's been fun to be bullish on America and be bullish on real estate for that matter. And I still am bullish on real estate. But I have to admit, I'm bullish, as I said here today, but I'm also a big student of the financial markets, the stock market, the bond market, commodity markets, as indicators of future economic activity. And as we looked at as we've lived now through the first 6 weeks of 2014, the stock market, the bond market, and the commodity markets aren't sending bullish signals right now. As I've been observing here, what I've seen is with the stock market down a little bit, interest rates going down, and gold going up, those don't normally happen all together at the same time. It tends to signal there's something wrong in the financial system. And so it's been kind of interesting to me to feel strongly bullish about the future of our country and watch the financial markets the way they've been behaving for the last 6 months. So I want to address some of that this evening with you because my conclusion, I'll give you a partial conclusion right now just in case you're already getting drowsy. I don't want you to miss this, all right? My partial conclusion is that as we sit here today, the stock market and the bond market have been, our federal government, our Federal Reserve has been intervening in the stock market and the bond market so heavily for the last 3 or 4 years, I'm not sure that the stock market and the bond market actually gives a signal of economic conditions in America. And what I've been observing for the last 6 weeks, what we saw was the stock market was off about 4%, and then we saw the 10-year Treasury start to move down. Everybody's saying, oh, the Federal Reserve's going to taper, they're going to stop buying bonds, and interest rates are going to go up, and it's going to get harder to sell houses and all of that stuff. And what we saw is that the second the Federal Reserve announced they're going to taper, interest rates didn't go up like everybody thought. They started going down. And so usually when interest rates go down like that, and then gold starts going up and stocks go down, what that feels like to me is like there's something wrong in the internal system of the global financial system, and I frankly don't know what it is. It seems like in the last couple of weeks those tensions have lessened somewhat. I honestly think what it felt like there about 3 weeks ago when the 10-year Treasury was down to about 2.6, even though the tapering was going on, when interest rates are going down and gold is going up like it was, it almost felt like people were moving to the sidelines, like I'm afraid of something, so I'm going to sell my stocks, I'm going to buy my bonds, and I'm going to buy some gold again. And I've spent a lot of time searching, trying to figure out what the answer to that is, and to be honest with you, which I always am, I was born and raised in Kansas, in Wichita, Kansas, and most people in Wichita, Kansas are honest and tell the truth. I get introduced like that all over the country. People will say, you can tell this guy is from Kansas because he's straightforward and tells the truth. And so I think that's a great compliment for being in Texas, and I'm proud of that when they introduced me that way. I think what was going on was, I think there was something wrong in the financial system in some other country, and it was being transmitted back to the United States. I feel like somebody like India or Russia or Brazil, we know that Venezuela and Argentina are collapsing every week that goes by. Those two countries are just imploding as we go. And what happens is a lot of this high-powered money that floats all through the system maybe has a big bet on in Russia or in Brazil or in India or Japan for that matter. They have a big bet on somewhere, and when that bet goes wrong, the size of those bets are so big that it can kind of scare people into thinking, I wonder if we're going to have another problem in our financial system. That's exactly what it felt like about 3 weeks ago. It's not there today. Our stock market's moving back up. The interest rates on bonds are moving back up again. So whatever it was, it feels like the symptoms are kind of moving on. But with that said, feelings mean nothing. And my attitude means nothing. My optimism or lack thereof means nothing. The facts mean everything. And so as this year has unfolded so far, it made me think, maybe I better go back to my fundamentals and look and see whether or not the fundamentals should make us nervous about 2014 or should make us feel confident about 2014. So that's what I want to do with you this evening. It doesn't matter if you believe me or not. I mean, in Texas, it's really tough that way because I went to the University of Texas, and I work at A&M, and I also spent some time at the University of Oklahoma, and I have a beard, so nobody believes me down there at all. So that's why I have these facts out here, and I want to go over them with you. What I'd like to do in the time I have here this evening is talk about the outlook for job growth in the economy, the outlook for inflation, some comments about the housing market, and some comments about the investment environment related to commercial real estate as well as stocks and bonds. I talked to a lot of private equity firms and high net worth investors that are interested in real estate as an investment, and that forces me to understand stocks and bonds and commodities somewhat as well, because people don't make real estate investment decisions in a vacuum. They make decisions to invest in real estate based on what else could I do with my money in stocks or commodities or some other investment environment like bonds. So that's why I want to talk about that for a little bit. So again, going back to fundamentals, is my optimism founded, or is it just wishful thinking? And so I'll let you make your own decision. I'll make my own comments as we go. By the way, Nestor, you know that being an economist means there's only 50% chance I'm right. And I've mentioned that you can get Greenspan here for $500,000. And I'm telling you, I think you might get Bernanke here for $1,500 next year. So if you do, let's get him, and I'll show up and sit with my mom back here for that one. His odds aren't any better than mine either, by the way. Okay, 65% of our economy is based on consumers spending money at the mall. And so two numbers I want to show you. The Consumer Confidence Index is just a survey of Americans about a variety of things, about their confidence in the future, and it's supposed to be somewhat of an indicator of their willingness to spend money. As you can see here, it's improving. Back in February of 2009, I think they did a national survey and found one person that had any confidence at all, okay? So we've had a massive rebound from like 1 to 6, all right? Now, honestly, it's quite a lot. And so these are the kind of foundation numbers that lead me to continue to be bullish. Actually, in the social sciences, that 50-50 disclaimer I gave you is actually pretty accurate. And I hate to say it, but I haven't been wrong very much for about 13 years, so I'm due to be really wrong, and it could be this year because I'm still bullish for 2014. That would just be my luck. But anyhow, the facts speak for themselves. This is the 65% of our economy. It's called personal consumption expenditures, just a big fat mouthful that says spend all your money at the mall. And you can see here, Americans year in and year out for the last 50 years, we are still globally competitive in a lot of areas, and there's one area that no country on earth can match us, and that is spending money. Nobody can spend money like Americans can. I told you 2 or 3 years ago we had 5 years of pent-up demand in this country, and I told you that Americans do not tolerate deferred gratification, and that's true, and we're starting to buy stuff again. The numbers are going up quite nicely. Car and truck sales are up. I focus on truck sales tonight. I focus on car sales last year because our cars had never been older. The average age of a car was 11 years old. The average odometer reading at CarMax was 165,000 miles. We don't like old cars. We don't like old houses or old cell phones or anything else. I'm focusing on truck sales this time because light truck sales are at very high levels too. And the reason that's important to me is because light trucks are the backbone of small businesses in America. And when I heard about a year and a half ago that small businesses were starting to buy light trucks again, I'm thinking that's kind of a go signal. That's an indicator that the small businesses in America are gaining confidence in the future, their future prospects, and willing to invest in a fleet of vehicles. Now my logic, my hypothesis is that a businessman or woman that just spent money getting a new fleet of vehicles for their small business, what might be the likely thing they might do next year? And that might be actually hire some more workers. And so that's kind of why I'm optimistic about next year. I think we would be seeing more hiring going on if we didn't have still this uncertainty about healthcare. I keep coming every year and saying we're not going to have a robust hiring environment in America as long as businessmen and women in America don't know what their healthcare is going to cost. And I keep thinking it's going to be over, and then they extend it for a year, and now they're going to extend it again until 2016. That's the only thing our Congress is competent to do, and that is to kick the can down the road and avoid making difficult decisions. That's the worst thing that happened in 2013 was Congress caved in and extended this exemption, or whatever you want to call it, for small businesses until 2016. All that means is the small businessmen and women in this room still don't know exactly what their health care costs are going to be. If they have 49 workers, they're not going to hire number 50. There are businesses all over America that have had 49 workers now since 2008, and they won't hire number 50 because they don't want to be on that dance floor. And so that's the number one problem in America that's retarding our economic job growth in terms of hiring people is the Affordable Care Act, and the sooner we get it over with, the better off our country will be. It's just like if you need to foreclose on houses. I remember 3 years ago, I was walking in everywhere, Maryland, you name it, Florida. It's like, look, modifying mortgages is not the solution to a housing problem. You know what the solution to a housing problem is? You foreclose on these houses and sell them to somebody else. The market clears, and off we start on a new recovery. And for most of America, the housing recovery is coming up strong. You know what few states the housing market isn't coming up strong? Well, that would be Florida. That would be Illinois, that would be New York, and Nevada. And you know what those states have in common? It's almost impossible to foreclose on a house there. It takes over 1,000 days to foreclose on a house in New York. And Nevada passes a law that punishes banks. If you foreclose on somebody in Nevada and you make one mistake, you go to Gitmo for the rest of your life. Okay? So all of a sudden, nobody forecloses on homes in Nevada, and all of a sudden you have this huge overhang of homes, and nobody will buy houses there because they all know you got this huge overhang, and at some point when those are sold, it might be a problem. The rest of the recovery, housing market around America is recovering because they were willing to foreclose on the homes, start over the marketplace. And that's the beauty of the housing market is we've gone from 2 years ago, the buyer psychology of housing used to be, I hate houses, I'll never buy a house, I'll be underwater, I'll never sell it, I'm 30 years old, and I'm going to live in an urban apartment for the rest of my life and ride my bike to work and with a helmet, okay? And that was what our future was going to look like. Well, I got news for you, these young people want to buy houses too. It's kind of an urban myth that people that are 30 years old aren't going to buy houses in the future. People that are 30 years old, they want to buy houses just as much as the previous generation is. It's just they're getting married late. Number one, they're leaving the house later. Number two, they're getting married later. And number three, they're having children later. And so you don't really get interested in buying a house until you got some kids. But once you have kids, like, can you imagine these 30-year-olds with their bikes and their helmets going, honey, Betty's got soccer, and Jimmy's got swimming, and you got a bike. Can you take her to the swimming pool? And I got a bike. I'll take him, and we'll kind of meet for lunch somewhere. You don't do that. You get a minivan. You move to a house in the suburbs. Okay? The housing market has turned. The buyer psychology for the housing market has turned from this way to this way in a strong fashion. And that's another reason I'm bullish. I'll get to that in a minute. Here's another reason you've got to be bullish. This is the net worth of the American people. As we said here tonight, Americans have never been richer in the history of our country. 78 trillion. This is household net worth. The American people have money. The net worth of America is 78 trillion. You know what the net worth of the Federal Reserve is? Ben Bernanke, now Janet Yellen, shop the Federal Reserve Board of Governors in Washington, D.C. You know what their net worth is? 50 billion. The net worth of the American people is 78 trillion. This is why I'm bullish. I got some huge blowback from an audience about, well, it was early 2012 when I turned bullish and I said, I'm bullish on America because of these things. And some of those hotshot rich people go, how can you possibly be bullish? Do you somehow think that Congress is going to do anything right to encourage businessmen and women to hire in this country? Do you think this president is going to come up with economic plans that are going to encourage people to create jobs? Do you? Huh? And I said, no. I'm bullish about the future because I'm bullish about the American people. And these slides I'm showing you are the American people. You're the backbone of this country. The American people are bigger than the House of Representatives. The American people are bigger than the U.S. Senate. They're bigger than the president, and they're bigger than the Federal Reserve. As far as I know, at least, they haven't passed any laws that makes it illegal for you to spend your own money on stuff that you want to buy. That's why I'm bullish about the future of the country here. And it doesn't matter. It's not a pep rally. I'm not going to ever run for office. Trust me. I'd last about a day. It would be fun. I would do it for a day. I'd love it, and then I would quit. This slide is even more bullish than the last one. This slide is the best slide of all. If you told me, Mark, you got 5 minutes, you can present one slide, 5 minutes, and then get out. This would be the slide. This trumps them all, in my mind. This is the percent of your income that goes to pay off debt service on stuff you bought in the past. How much economic growth do you think happens when you go get a paycheck and then you pay off a bank loan on a boat you bought 8 years ago? That doesn't help anything. What does help is when you go out and borrow some money and buy a new boat. That creates jobs there for the people that built those boats. This is the percent of your income that goes to pay debt service after taxes. It runs in a range. This thing goes back to 1980. You can kind of see we get heavy in debt, then we pay it off. We go into recession, then we get heavy in debt, then we pay it off. Do you notice how we went kind of crazy in 2008? I guarantee you I was here in 2008 saying, folks, it appears there's no limit to how far the American people go into debt. And then we found out, yeah, there is a limit. Then I said, we won't have a real economic recovery in America until this gets back into a normal range. I thought it might take 5 or 10 years. This is breathtaking how fast this is happening. As we said here tonight, not only are we back in the range, we're not at the top of the range or the middle of the range or the bottom of the range. As we said here tonight, you can say that Americans have never had a higher percent of their income available to buy things than they do right now. You combine that with we've never had more wealth, we've never had more capacity to buy things, with the fact that we do not tolerate deferred gratification. And it's not illegal in America yet to buy stuff you want. You combine those 4 things together, that's why I'm optimistic about 12, 13, and 14. Now, if they make it illegal to buy stuff, this is all off, okay? They tried that with big sodas in New York City. It didn't work, all right? And, yeah, whatever. Here's another reason I'm bullish. Corporate profits are at record highs. Is the dean of the Wichita State Business School in the room? Okay, I'm going to tell you this right now. You don't have to have a college degree to forecast job growth. In America, we live in a place called capitalism. Capitalism, all you got to know about job growth is when profits are up, businesses hire, and when profits are going down, they start firing people, and they keep firing people until profits go up. You don't even need a statistics degree here to take a look at what's happening in profits. Record high. As we said here tonight, the only question is, with profits at record highs, how come we're not having record high hiring going on? I already told you the answer to that. It's in a different area of the country. People that pretend to be leaders of this country, it's their job to create an environment that's positive for businesses, and they're completely failing at doing it. Everybody looks at this and goes, we should be having a lot more hiring. I think if we can finally get healthcare costs behind us, we'll start seeing some more hiring going on. With these profit levels, it should be happening. The question is not why isn't it happening, but what's causing this to not be happening? That didn't come out quite right, but it's 5:30. I didn't have any alcohol to drink, by the way. But you know what I'm saying. This is a survey of small businesses saying, are you going to hire in the next 3 months? Small businesses employ 2/3 of the workers in America, and they create 80% of the new jobs. This is a big deal. This is the percent of small businesses across America that say, we're going to hire in the next 3 months. The trend is up. It's not back to where it was in 04 or 05 or 06 or 07, but we're getting a nice gradual increase every year, and that's continuing. The big companies, same thing. The percent of large companies by the Business Roundtable survey, 34% of large companies say, we're going to hire too. 22% say they're going to lay off. The weakness in our U.S. economy is largely in government-related expenditures, federal government-related expenditures. It's called sequestration. For the last 2 years, sequestration has put a lot of pressure on federal government contractors and the federal government itself in terms of costs. So my guess is a large portion of that 22% that says we're going to have less workers in the future have to do with government-related employment, largely contractors. Manufacturing is picking up. Who would have thought? I'm 59 years old. For those of you that are my age or older, would you ever have imagined this phrase, that Toyota is going to manufacture cars in America to export to Korea? Would you have ever guessed to hear that? And then 90 days after that, Nissan says they're going to do exactly the same thing. That's what happens when you get the wage levels correct and you get energy costs low, and if you don't regulate and tax businesses into oblivion so they move to Mexico or China or somewhere else, the American businesses in this country and the workers in America are competitive. And so our manufacturing has picked up dramatically. And it's going to get even better as we get more oil and gas. The feedstocks of many manufacturers in this country are oil and gas, and as we produce more of that and that cost gets lower, it's going to make it easier for manufacturers all over this country to compete with China and Germany and other places like that. Here's a number you might not hear if you're watching TV, and I recommend you don't. It's a waste of time. But here's what you might hear if they weren't trying to create a crisis every night to get you to watch TV. How many jobs are open in America right now? All you hear about is the unemployment rate. The unemployment rate's going down, but it's because people are leaving the workforce. Blah, blah, blah. How many times do you hear people say on that same news broadcast, there's 4 million jobs available tonight? If you got a friend that's working in Maine, or they're in Maine, they got a degree in political science or something like that, and they haven't found a job, tell them to move to North Dakota. Tell them to move to Midland, Odessa. Tell them to move to Karn City. You can make $110,000 driving a truck down there. All you got to do is have a driver's license and pass a drug test. 4 million jobs open in construction, manufacturing, transportation, professional business services, healthcare, leisure and hospitality, government. This is not a country that is not vibrant and healthy. This is a country where you have a bunch of people that need a job, and you have a bunch of people that need a worker, and somehow or other, they're not getting matched up. The government sector is weak. The government has been laying off people because they had to right-size just like businesses did. They were slow to right-size because we blew $1 trillion in the stimulus package, which we gave away to states and cities, which they used to avoid layoffs for a year. And then when the money was gone, what did they do? Laid off people, okay? The good news is, well, depend on your point of view. But the good news is income tax revenues are up. The good news is property tax revenues are up, and so are sales tax revenues. So what that means is states and cities and counties don't have the need to lay off people to balance their budgets anymore. And so for the last 3 years, what we've seen is the private sector has been hiring, but the public sector has been laying off, and so it nets out kind of tepid job growth. The reason I'm bullish about 2014, in addition to these other slides I've shown you, I think it's very possible with the revenues that's coming into the states, cities, and the counties that they will actually start hiring people in 2014. So we'll have a continuation of the private sector entrepreneurs hiring people and be supplemented or augmented by hiring and spending at the local, state, and county levels. And so it could be even better than 2013. The federal government hiring is down. The state government hiring is down. And so is the local. But as you look at these, the downtrend has gone flat. I think the need to lay off at local government and state government is over, and I think they could begin to start hiring people again in 2014 and be a positive part of the economic growth of the country going forward. So bottom line is, if I was an attorney, which I'm not, that would be my case for why I'm bullish about 2014. Now, with that said, I want to talk about inflation for a minute. How many of you commercial real estate investors and brokers in the room still have an HP 12C? Raise your hand, let me know. Yeah, there's quite a few in the room. The reason I'm asking is because I found a huge correlation between people that are still using an HP 12C and people that are really worried about runaway inflation in the future. It's like that little calculator's got a button. If you hit it on the wrong button, it goes, look out for runaway inflation, okay? I mentioned for the last 3 or 4 years, you can't have inflation without wage increases. It's pretty simple. If the price of oil goes up to $7 a gallon and you don't get a wage hike, how are you going to create inflation with that? All that means is most of your paycheck's going to go to the local gas station, and you're going to spend less money at the movie theater and the restaurant and the clothing store. Wage growth in America is averaging about 2%. So until you get news like the wages in America have gone up 4% a year, and it looks like they're going to go up 6% next year, and it looks like they're going to go up 6% another year after that, then we can start thinking about, worrying about inflation. That is not happening by any stretch of the imagination now. The average wage rate is about 2 or 3%. What happens if you go on strike in America now? What usually happens? the owner closes the plant and moves it to Mexico or China. That's usually how it works right now. So that's why I'm still not concerned about inflation. This is the actual CPI rate of inflation going back to 1910. So all I want you to do is look at the right side of this, and the bottom line is inflation has been flatlined at about 2 or 3% since 1983. So those of you that are old enough, that's why I use the HP 12C, because I used to have one too, till I loaned it to a student and I never saw it again. It still has my initials, MD. So if you see one, it's got MD scratched in there, that's me. I'd like it back. Inflation is remaining low. Jerry was talking about farmland going up in value. You might remember a saying, I like to say absurd things because I learned in the classroom, if you say absurd things, your class remembers it for more than just a minute or two until the test. Some of you in the room might remember about 2008 or 9, and I said if you're even thinking about buying gold, I would recommend you take cocaine instead because at least you'll feel good before it kills you. Does anybody remember that at all? Just a couple? Okay. Well, the reason I said that was because the fear was of runaway inflation. And I was saying there's other ways, other investments you can make to protect yourself, even if there was runaway inflation. And that list was pretty short, but it was apartments, it was crop-producing farmland, and also inflation-protected U.S. Treasuries. I said, you don't invest in gold. That's a commodity. You either speculate in commodities or hedge risk by commodities. You don't invest in commodities. You invest in real estate, stocks, and bonds. Well, guess what's happened since 2008? Inflation protection treasuries went through the roof to a record high. Now they're back off a little bit. Apartments went through the roof, and they're still there. That's what I was telling people. It's like, look, gold can go down 40% in a matter of months, and apartments don't do that. Crop-producing ground doesn't do that, but that's why the price of grain-producing cropland, whether it's corn, soybeans, or cotton, or the other one I can't think of right now, but the bottom line is any crop-producing farmland is in high demand and at record prices, and it just keeps going up. Commercial real estate, Jerry talked about cap rates being at record low levels. The opposite way of saying that is that the prices are kind of at record high levels compared to the return you can get. There's a reason for that, because people want to invest in real estate. They're worried about inflation. I'm not really all that worried about it, but plenty of people are, and so they're going into crop-producing ground, they're going into apartments, and they're going into the farmland. And the other one I might mention to you is self-storage. Self-storage units are one of the best hedges against inflation because the lease terms on self-storage is only 30 days. So if you have some kind of inflationary event, you can change your rent in a self-storage unit in 30 days. That's why it's so much more popular, say, than an office building that has a 10-year lease. Because if you have an inflation problem, it may be 10 years before you can raise rent on your building. That's why apartments are at record highs, because an apartment lease is usually a year, so you can change your rent in a year. Self-storage is 30 days, so that's again why people are interested in these different real estate classes. The housing market is important for a lot of reasons, and I want to talk about for a minute. The bottom line, this is a national survey. The percent of people say, I want to buy a house is increasing, and it's been increasing for about 2 years. I think the go signal, like in the Summer Olympics and the 100-meter dash, when those big guys that get down low, and then the starter guy goes, on your marks, get set. And then they shoot that gun off, and poof, off they go, the starter gun. The starter gun for the housing market recovery happened about 2 years ago. I read it in the Wall Street Journal. That's all I read is the Wall Street Journal and CNBC. 2 years ago, a little tiny article said home prices in Phoenix are up 20%. That was the starter signal for the housing market. Because do you know what happens when you buy a house with a 10% down payment and it goes up 20% in 1 year? Do you know what your return on equity is that year? That would be a modest 200% return on your money. This is when 30-year-olds suddenly decide, you know what, I'm not sure, I might not buy a house too. I'm kind of big on that. Visualize this, you're in Phoenix, and you're in some kind of computer programming office. My son's a computer programmer, so I kind of know how some of these people might behave. Not him, but some of the people he works with. Okay, so you got these computer programs, they're all 32, and they'll ride their bike to work, and a couple of them don't even take their helmet off. Just leave it on all day, okay? And they're doing their programming. And over a break, 3 of them go, hey, Mort, I heard you're a knucklehead. I heard you bought a house. How stupid are you? And Mort goes, well, let's see how this house is working out here. I bought it with a 10% down payment. It went up 20%. That's a 200% return on equity. Betty, how you doing with your Zynga IPO that's off 40%? How's that working out for you? Oh, Samuel, how's your Groupon stock working out for you? How's those social media stocks working for you? I'm up 200%. How are you? Oh, minus 40. Okay? Ever since that headline came out, in my mind, this chart, the percent of people nationally that say, hey, go and buy a house, hit the bottom and has been going up ever since. Home builder sentiment. This is the percent of home builders across the nation that say, answer this question, how are sales? Good, fair, average, or poor? This is the percent that say good, and it continues to increase. We're not building enough houses. The inventory level, I heard Jerry say, is getting low here in Wichita. That happens all over the country. There's not enough homes to buy. There's not enough subdivisions being created in a lot of areas of the country where you have job growth. Inventories are getting low, and there's no supply coming online, and that's what creates price increases when you've got an increase in demand and the supply side can't respond. It's a common story all over the country. With that said, and as you can see here, housing starts are picking up, but look how low they are compared to where it was normal. So we've got an increase in demand without a supply response. That's going to create a positive price trajectory for home prices in many parts of the country, except for those states I mentioned earlier in my speech that don't know how to foreclose on houses. So with that said, I wanted to kind of balance my optimism, which I've based on the information I've presented tonight, with some of the challenges. It's not all rosy. Wichita is not unlike where we were a few nights ago, Las Cruces, New Mexico. Not much different than Wichita Falls or places all over this country. You've got kind of two situations going on. If you live in an area, a city, or a region that's in the energy business, you're doing really well. Lots of job growth. But a lot of America isn't in an oil and gas region, and if you're not, then things are a little different. You're still waiting for the recovery from the 2008 recession. And here are the issues that are buffeting many parts of our country that aren't getting the benefits of this huge expansion in the oil and gas industry. And here's what we're waiting for in places like Wichita and Las Cruces and Abilene and many parts of Florida and all over this country. These are the headwinds we're still waiting to go away to get more job growth across the majority of America. And number one is the slowdown in federal government hiring and spending. It's causing a lot of impact on federal contracts. If you have federal workers in your town, whether it's the IRS or it's the Border Patrol or whatever kind of federal workers you have, they aren't hiring very much and haven't been for quite a while. There's also a slowdown in state and local government that I've already talked about. This turning the corner. There's also been a dramatic decline in new home construction. This is huge. There's been a huge decline in new home construction in Wichita, Kansas, just like almost every place else in this country. And when people build homes in Wichita, Kansas, the multiplier effect is huge. The sheetrockers, the roofers, the bricklayers, the concrete people, the excavator people, the surveyors, the abstractors, the title companies, the insurance companies, The Lowe's, the Home Depot, all of that. There's this massive multiplier effect. Every home that's built in Wichita supports a whole bunch of jobs, and you're not building a whole lot of homes here, just like a lot of places in America. And what I hear from home builders is, two reasons is, number one, it's hard to get money to build speculative homes, but number two, it's hard to find workers. There's a huge worker shortage in this country. We talk about the unemployment rate being off the chart. You ask 10 home builders what their biggest problems are, and you find out. Don't trust me. Don't take my word for it. Ask them yourself, and they will tell you it's hard to find qualified workers that have skills in this country. In my mind, we need a whole lot more immigration in this country. We need a whole lot of people that want to come to America and work for $12 or $15 an hour, that have skills as a bricklayer or a stonemason, or they're just willing to work outside in the heat during the summer in Wichita, Kansas. We need a lot more skilled workers in this country, and I think immigration is going to be a key. We just need those kind of people here. The slowdown in hiring due to the uncertainty regarding health care. I keep waiting for this to be over. It keeps getting extended. It's kind of like a stomach ache that just never seems to quite go away. And then here's the other issue that's impacting you here and everybody in this country is what I call a bifurcated market. Have any of you heard this phrase the last couple of years? The rich are getting richer and the rest aren't. That's a fact. That is a function of the Federal Reserve's monetary policy. This is the whole reason that interest rates are at zero in America and have been at zero for the last 5 years. I read a bunch of speeches that Janet Yellen wrote. I do have a character flaw that allows me to read lengthy documents from the Federal Reserve, and I actually like doing it, okay? And I read a whole bunch of her speeches, and one of the quotes in there, it's in an article I just wrote for our magazine, but she says, look, we're keeping interest rates low to make the stock market and the housing market go up. It's called the wealth effect. The idea is that if I'm the Federal Reserve, if I can get stocks up and houses up, you're going to feel wealthier, and you're going to be more likely to go buy a boat or a bowling ball or whatever it is you like to do. Wealth effect. Well, look how this is working. We got interest rates at zero. Stock market's almost a record high. The bond market went to a record high before it's settling back. Commercial real estate is back up to record high levels. So here's the bifurcated part of America. There's a smaller segment of America that owns stocks and owns houses, and they're rich. And then there's another segment of America that doesn't own stocks and doesn't own houses, and they're not rich. These are people like single moms with a couple of kids at home. She doesn't own stocks. She's renting a house. Her wages have been going up 2% a year while prices have been going up that much or more. And so this is where you see this bifurcated market. You start seeing proof of it when you see that Michael Kors sales are at record levels. You see that Picasso at Sotheby's sells at a record high price. You see that the Bentley dealer or the Rolls-Royce dealer is having a record year. And then you hear news about McDonald's sales struggling, Target sales struggling. This was before the credit card problem. Walmart sales struggling. Dollar General, Dollar Tree. So the deal is, if your customer owns stocks and houses, they're on the dance floor. If your customer doesn't own stocks and houses, they're waiting around for the recovery. The Federal Reserve can make rich people richer. The Federal Reserve cannot create a job in the aircraft industry. Congress and the president. It's called fiscal policy. Congress and your president and mine are the ones that create an atmosphere to encourage businesses in the aircraft industry or any other industry to hire people. The Federal Reserve can keep interest rates at zero for 1,000 years, but without a positive environment in our government for business, the hiring doesn't happen. So the A team is Congress and the president to create real jobs. The B team is the Federal Reserve. The A team has a cannon to fire to create jobs. The B team, the Federal Reserve, has a pea shooter, and they're shooting it hard. They're doing the best they can. And their pea shooter is keep interest rates low to make stocks go up so people feel wealthy and they buy stuff. That is our plan for economic growth in America, and it's a lousy plan unless you own stocks and houses. I happen to own both of those right now, so I'm thrilled to death. Okay? Now, Jerry mentioned the cap rates are low. What that means is the yields on real estate are pretty low. So some people might say, well, I'm not sure if I want to buy real estate right now because the yields are kind of low. So I ask people, I get this kind of question all the time, get these discussions, and I'll say, okay, well, where are you going to go with your money? If you're not in real estate, what can you do? Go in the bond market? Nobody wants to go in the bond market with the Federal Reserve tapering because if interest rates do go up some, you lose money in your bond portfolio. And everybody knows that right now. So if you're going to come out of real estate or decide not to buy real estate, so you go in the bond market, nobody wants to do that, so what's left? Commercial real estate or stocks. Stocks. If you're coming out of commercial real estate into stocks. And so here's a couple of observations about commercial real estate. What I've noticed in the last 6 months is sovereign wealth money, well, just money in general from overseas is just flowing into America to buy real estate. Sovereign wealth funds like China, for example, the Middle East, Singapore, moving into this country and buying commercial real estate and driving high prices even higher. Not only that, but high net worth investors in other countries are floating into America to buy real estate, fleeing from their government. If you happen to live in Venezuela or Argentina, I can guarantee you are doing everything you can to get your money out of those countries to buy real estate in America, just to park money to get away from your government. They've closed the doors now for that, but money is flowing in. Not only that, but real estate investment trusts, private equity firms, and individuals. So the demand for commercial real estate is still strong, even though the yields are pretty low. So with that said, I want to close, and an old economist told me like about 12 years ago that I should always use the words "in conclusion" in my speech to give my audience hope, okay? So I'm on my last 2 slides as far as I know. So let's assume you're kind of thinking, well, I don't know if I want to, and I don't sell real estate. I'm not licensed. I don't care if you buy an ounce of real estate. I'm just trying to help you with some logic about making decisions. So if you're thinking, I'm not sure I want to buy some more real estate because prices are kind of high, the cap rates in Wichita, Kansas are amazing. That 10% number that was up on that screen, you can't find 10% hardly anywhere in America. So it tells me it's like a triple net lease Walgreens in Wichita, Kansas is a pretty darn good investment because the yields are higher here in Wichita than they are in most places around America. I don't know why that is. Maybe they just don't know where Wichita is, or maybe because Wichita State is in the Missouri Valley and they never hear them on ESPN. I don't know what it is. I'm just telling you that you get a little more bang for your buck here in Wichita from that standpoint. So let's say just for fun, I think real estate's too high. I'm not going to go into bonds, so I'm really thinking about going into stocks. Well, here's the information I might offer to you as you consider that. Number one, corporate stocks go up with earnings. This is how the stock market works. Earnings are up, stocks go up. Do you notice here that in the last 2 or 3 years, while corporate profits are at record highs, they've kind of stopped going up? The growth rate is not near what it used to be, okay? But that's not the biggest issue. This is the biggest issue. This is a slide, last 2 slides I want to show you. I don't know why nobody talks about this, but I've been following this slide for years, and I didn't look at it for a long time until about 6 or 8 months ago. I went, oh my gosh, this is called margin debt at broker-dealers. Now, all this means is you borrowing money to buy stocks. If you borrow money to buy stocks, it's called margin debt. So when margin debt is high, that means a whole bunch of people are borrowing money to buy stocks. Again, you don't need to be a statistics major here to look at this slide. I see 3 peaks here. The first peak is over on the left, and I thought, you know what? I had a day at home in the office in College Station, and I was looking at this slide, and I thought, I wonder if margin debt has any relationship to stock prices. So I looked at that peak, the first one on the left. That was March of 2000. The Dow was at 11.2, and then I thought, what happens a year later? A year after that margin debt peak, the Dow was down from 11.2 to 9,100, and 2 years later, it was down from 11.2 to 7,400. So I concluded with a little bit of logic, it looks like that might not be a good idea to buy stocks when margin debt is at a peak. So then I looked at the second peak, which is close to the middle of that slide, which was July of 2007. The Dow then was at 14,000. A year later, it was 10.8, and a year after that, it was 8,000. So I'm kind of starting to draw a little conclusion here that maybe when margin debt is really high, it's not the best time to be in the stock market. Now, do you notice a third peak on this slide? That would be tonight. Okay? So as you're deciding whether or not to go to buy some real estate or take that money into the bond market or the stock market, this is what you're buying into in the month of February 2014. You'll be buying into a stock market at a level of margin debt that has never been this high in history. I'm going to close with the last slide. I asked one of my friends in the office, Dr. Leonari, and we had a saying at the University of Texas when I was in graduate school that if you torture data long enough, it'll confess to anything. And Ali is our waterboarder, man. He doesn't like to give speeches, but he can beat data till it screams for sure. And so I asked Ali, I said, show me the correlation of this. I showed him this humble little punky slide that shows peaks with some numbers. And I said, show me the correlation here between margin debt and the S&P 500. So this chart is noisy. I want you to look at it for just a minute because number one, it's the last slide and we're done for the night after we say goodnight. But you can see that from here. I can see that from here. Number one, the blue line is the growth rate in margin debt. You see that orange arrow? It looks kind of red, but it was orange when I made it this morning. That orange arrow is pointing to the blue line at a really high peak. That was when margin debt was growing at about 70% a year. What you can see from this slide, if you look at it for a little while, is that they're almost perfectly correlated. When margin debt's going up, the S&P 500 goes up, and when margin debt goes down, the S&P 500 goes down. It's almost perfectly correlated in a lot of ways. So what that tells me is when you're at record highs in stocks, you should be at record highs in margin debt, you should be at record highs in stocks. And when you get at record highs in margin debt, there's a risk that the stock market can go off pretty good when that margin debt goes down. There's one other piece. I have never showed this slide to anybody. I just decided to do it tonight. You notice how the font inside there where it says annual debt is different from the title? That's because I couldn't change it. All right, that's why I haven't shown it, because I couldn't change it. And I decided I'm going to show you this anyhow, even though the font is different. So you can forgive me for that. But what you look at here, if you look at this long enough, you'll see that these go up in tandem and they go down in tandem. But there's also a pattern that happens almost every time, is that, do you notice how the blue line, after a while, gets way above the red line? Every time. What that means is there's a certain point in time when the stock market and the margin debt are going up at the same pace, and then there's a point in time where the stock market stops going up and the margin debt keeps going up. I call those caps. You see those caps all the way through there where the blue line is way higher than the red? It's every time. This chart goes back to 1960. These are stock market cycles over the last 55 years or so. And what I see out of this is that, man, as long as margin debt's going up, stock market's going to go up. And when margin debt goes down, it's going to go down hard. And what happens about every time is there's a point where the margin debt keeps going up and the stock market doesn't, and that's when it starts to go down. That's why I've been kind of watching this chart. I'm going to go back to this one because, as you can see, as we say here tonight, margin debt is still on the way up. But for the last 6 weeks, the stock market hasn't gone with it. So we're, at least right now, building this kind of little cap, if you will, where margin debt is still going up and the market isn't going with it. So again, I tell you, disclaimer, don't buy or sell any stocks based on anything I've done. I have a 2% allocation to stocks and an 80% allocation to commercial real estate. I'm just showing you this as a little bit of interest and it helped people make decisions on whether or not I want to buy commercial real estate, or maybe I won't because it's highly priced, because I'm thinking about moving into stocks and out of commercial real estate. So anyhow, with that said, let me just thank you for your kind attention. It's great to be back here in Wichita, and I hope you have a wonderful year in 2014, and I hope the Shocks are national champ by the end of March. Thank you.
Was that outstanding? Mark, you're outstanding. Thank all of you for being here. We're going to send out a little survey to have you rate us. We want you to tell us what you think of us. Thanks for coming. Enjoy the rest of the evening.